What's up, everyone? It's Scotty with Money Investing, and here we go. Last trading day of 2022. We've come a long way. We've finally made it. Today is the last day. We put this year to bed, and we look forward to hopefully a brighter and better future of 2023. So if you guys can hear me, see me, just give me a thumbs up. Just want to make sure that the audio and the video is working well. So let me know in the comments. And yeah, here we go. We've got the poll going, so make sure that you do vote if you haven't already. And we are ready. We're ready to get going here. So thank God it's over. So I think we flush and reclaim all of this and have another green day today. So right now, pre-market, we are selling off a little bit. So QQQs is slightly down, a little bit over 1% pre-market. We've got the SPY down 66 basis points, and the Dow Jones is down about 43 basis points at the moment. Of course, yesterday was a very good day. It was a bit of a green day. And right now, pre-market, we did gap down a little bit. We pushed higher, kind of filled that gap, and then started to sell off once again. So thank you so much for joining. And I've already done a video pretty much going over the lessons learned, some of the lessons that I've learned, some of the things that I've reflected on in 2022. So you can check that out as well, and make sure that you do share with us in the comments, in the tweets, what are some of the lessons that you've learned when it comes to the stock market, when it comes to finances, investing in 2022. What are some of the best lessons you've learned? What is something that you can take away from this year so that we can all kind of collectively share each other's perspective and learn from each other as well in that regard. So thank you, Caddy, for everything you had taught us this year. Lots of blessings, Alonzo. Thank you so much. I really appreciate it. And yeah, looking forward to another fantastic year of just the markets and, of course, education, investing, and a lot of things. So really looking forward to 2023 here. Short squeeze, a trend continuation is 2.4 is a record. With squeeze or at least 1, it is at least another 7% on indexes, all I can say. So that would be nice. Yes, the put call ratio is still pretty high. It's still about 1. So that does or could suggest that there might be some short squeeze action coming in. Right now, Tesla's down about 2%. We do have Google down about 1.29 and Apple here and down about 1.17%, with Microsoft also dropping about 1%. So we'll continue to monitor and see if we do get a breakout above some of these middle VWAPs, some of these moving averages, for some of these stocks to kind of start pushing higher once again. Because right now we are seeing a lot of weakness pre-market. So Gene is saying your channel is gonna better blow up next year. So we're gonna try. We're gonna try our best, right? We're gonna try to at least get up to 100,000 subscribers next year. We obviously need about 28,000 or something. So I really, pray you guys can help us get up there, and at least get us to 100,000 subscribers. So that's gonna be the goal. That's the target. So we'll try. So all right, what's your take on what this looks like after yesterday? So right now, again, we're seeing a bit of a pre-market pullback. This right here, resistance at 265, 266 for the QQQs. So, we kind of gapped down a little bit. We pushed higher, got rejected there, and then really started to sell off quite aggressively. And right now we're starting to kind of rotate back down. Now there is a little bit of a support at 263. So this right here is a green rectangle for the QQQs. So this right here is the one that we have kind of bounced off of plenty of times. This is exactly where we bounced off of here, bounced off of here, bounced off of here, here, bounced off of here. Then we broke down. This acted as a resistance a couple days ago, validated the support down to 260s. And of course had a very nice breakout yesterday, a very strong green day. This right here was that yesterday's intraday high. Right now we're coming back down to that support at 263. So I do have a little bit of a long bias at 263. So we'll see if we actually do get a bounce, a validation at that level for the NASDAQ as soon as the market's open in about 15 minutes here. Or if we continue on this downtrend and of course continue the selling pressure on the last trading day of the year. And if the NASDAQ is down a little bit over 1% here, or if we are able to kind of regain a little bit of momentum and maybe make our way back up to 265, 266. That's going to be that next resistance level to watch. Timothy says yes, still the silver play metal. That's the goal. That's is what we're gonna try for. So Alex, I'm surprised to see that you're not wearing your red shirt today. I was actually thinking about it this morning. I was going to, but I ended up wearing that at the gym. So I really thought, you know what, that's fine. I'm just gonna keep it normal, and we'll see what the markets end up, looking like and trading like on the last day of 2022. We're still obviously going to close the year down. So NASDAQ is going to be down 34%. S&P is going to be down about 20% or something. And of course, the Dow Jones also going to be down 9 to 10%. So it's going to be like 10, 20, 30, the Dow, S&P, and the NASDAQ. So yeah, that's where we are. Not a lot of upgrades, downgrades to go over. Not a lot of macro stuff. Earnings were pretty much non-existent. We were pretty much done with the earnings this week. So it all comes down to one last day, one last dance from the markets for this year. Then we go into this long weekend. Remember, Monday is going to be a holiday. Monday's market's going to be closed in observance of the New Year's. And yeah, so we've got a long weekend coming up. And this is it. Let me know what are some of the lessons you guys learned in all of 2022. I shared my video earlier, so you can watch that if you want to get my 7 to 8 lessons that I learned this year and something that I will be focusing on in 2023. What are some of the things to really be paying attention to going into next year, and of course for years to come, to really help us identify some of those next big set of ideas. But let us know which what are some of the lessons. Brandon says I learned not to buy stocks. Oh man, so there's a lesson that I put in there in my video. Is there's the lesson is that we need to do better. I need to do a better job in recognizing when there is time to invest and then when there's time to trade, right? Because there's, I think, two different things, and I think I need to do a better job in kind of recognizing what type of market environment we're really in, and whether it is time to be investing or whether it's time to be actually trading in the market. But yeah, no, that's a funny one, obviously, to not buy stocks. But yeah, I mean, this is some years are obviously like this. Not every year is like this, but some years, if you've been in the market long enough, you know that there's going to be times when the markets are red, they're down, they're brutal. So. William says, always have cash. That's a good one. That's a really good one. That's really simple, yet really powerful. Always have some dry powder available. Always have some cash available, which I think can always put you in a more comfortable spot, regardless of what's going on in the market. You are prepared. You are available with buying power so that you can take advantage of opportunities there. Bill says, have patience. Again, very, very simple, yet so powerful. Patience is a very important sort of emotional tool that you can have when investing in the markets, right? Allowing for the prices to come to you, letting your winners run. Patience really plays a big role there. I need to learn when the heck to get out, Donna says. So yeah, I think the big question you do ask there, when to get out, is really when your thesis changes, right? Whether you're trading a stock or whether you're investing in a company, when your thesis really changes, right? If you're investing in a company, the fundamentals change, or you're trading a stock and the technicals change, that's when you need to get out. That's when you need to decide to no longer be a part of that position, so to speak. So I think that can really help clarify certain sort of things there. And fundamentally it's a little bit difficult. Technically it's easier because you're just depending on the charts and you're looking at the technicals, and once the stock price, let's say for example breaks down a certain support, then you know that your stop loss needs to get triggered and you need to get out. But fundamentally, it's a little bit difficult because you're trying to anticipate something that hasn't even happened yet, right? You're looking at company's earnings last couple of quarters. A company may be struggling, but that doesn't mean that they're going to keep struggling in the future, right? That doesn't mean the next few quarters are also going to be horrible. And another thing that's really difficult to also anticipate is the qualitative analysis aspect of the business, right? Internally, what type of changes are happening, and if that company is still worth holding on to, or if the management is really, driving the company to whatever chaos they're going to. So those are some of the things that are a little bit difficult to anticipate, and that's more of a gut check than anything else. But in my experience, that just comes over time. All right, so let's see. To lose patience is to lose the battle. Mahatma Gandhi said that certainly this wise saying can be applied to buying and selling stocks. So Alex, that's a good point. That's a great point, man. And yeah, I like the reference, Mahatma Gandhi's reference. Addie says, lesson for me, stocks can go down 50% after it has already gone down 50%, and then the cycle can repeat again and again. That's true. That's true. A lot of people think that if the stock has gone down 50%, it can't go down another 50%. Well, it can still get cut in half. it can still always get cut in half. Even if the stock drops all the way down to, let's say, 10 cents, it can still drop a 50%. Can you believe that? Absolutely crazy. So you're right, that cycle can continue. That's more of a math lesson than anything else, but no, you're absolutely right. So I learned and still learning to be patient. That's great, Atif. I really encourage you to learn about patience, and I'm still learning it to this day. I'm not perfect either. A big lesson: don't go for a long-term investing during the bear market. So Tian, that lesson may sound great on paper, and that lesson definitely, that sounds great, but nobody really knows if there's going to be a bear market, right? The fact is that we don't know if it's a bear market until it's already happened, right? So the idea to not go long with your long-term investing in a bear market, well, how would you even know if it's a bear market until after it's already happened, right? So I get what you're saying, but I think you can rephrase that a little bit to pretty much goes to show that don't basically focus on long-term investing if the pattern of the overall market is downtrending or if it's making lower highs and lower lows, stuff like that. Because the bear market, markets being down 20%, nobody really knows until it's already happened. Howard says, keep on buying when you think the bottom is in. So again, a little bit correction there. Nobody really knows when the bottom is in, or nobody can really actually predict when the bottom is in. But I get the idea, like just keep on investing, and dollar cost averaging, of course, has been the key to success for many centuries. So the expectation is that it's gonna continue to kind of work out. So Wilmo says, ask yourself if active investing is worth your time and stress. And that is really true. It's not for everybody. And I think Ali says it really well here too. Index versus stock selection isn't for everyone. And it really comes down to your lifestyle, right? It's not even so much about, your skill. And sure, that's something to do with it. But I think it also comes down to your lifestyle, right? How much time do you have outside of your day-to-day life, outside of your work, to put into research and analysis? If the answer is not a lot of time, then you maybe want to stay clear from stock selection or trading for that matter, because you're not going to be able to put in enough time to research and do the required work that's necessary to look at the companies, look at the fundamentals, do proper research. And that's not a bad thing. It just means that you much rather do other things that are more meaningful in your life than look at spreadsheets and stocks and whatnot. So that you can approach a more passive way of investing in the markets. But if you are interested in those things, if you have the time, and if you are willing to do it, and if that's something that you want to make time for, then absolutely, I think you can learn about companies, you can learn about what the next big trends are, look at the financials, look at the technicals, and be a little bit more active and tactical with your approach. And there's no right or wrong answer. It just depends on what your lifestyle allows you to do, and just how many hours are you willing to put in every single week on this. Obviously, it becomes more difficult. If you have a family, if you have kids, obviously it becomes far more difficult then. But it just comes down to your lifestyle preference. All right, let's see. I've got some great lessons that are being mentioned here, and the great thing is that everybody can take from each other's lessons. Like there's a lot that I haven't thought about, and obviously we have this is gonna lead us to a more exhaustive list, so that everybody can learn from each other as well. Anand Kadi, is this your first bear market? No, absolutely not. This is my third bear market. I started investing in 2016, so 2018 was brutal, the fourth quarter of 2018. Then, of course, we had the 2020, and now 2022. I just realized I've experienced a bear market in every 2 years. Every 2 years. Like it used to happen like a 7-year bull market and then a 1 year of bear market, like obviously from all the historical studies. But I just realized that I've experienced a bear market in every 2 years. So according to my analysis, we could see a bear market in 2024. If that ends up happening. So, but yeah, that's three total. Obviously, when it was 2008 great financial crisis, I was 12 years old. So I was like, and then dot-com bubble, I was like 4 years old. So super young back then. So 2018, 2019 was not really a bear market. It was just the last few months. So, S&P 500 did drop a little bit over 20% back then. So that really is a technical definition for a bear market. So if you take a look, this right here was the drop of 21%. I think the Nasdaq was down a little bit more. This right here, the Nasdaq was down 24.43%. So yes, I mean, obviously we did see a very nice recovery back in, but this really started from September all the way through December. So we did see a bear market for about 3 months, 4 months before the market started recovering back in. And a lot of it was actually due to the US-China trade wars and what was going on from a more macroeconomic global trade standpoint. But of course, recovery, you're right. The recovery was much faster, and so was also true during COVID. But this has been a more prolonged bear market for sure. All right, let's see. So, all right, let's see here. Which one is the worst performing stock in your portfolio, Caddy? I would have to say like either Meta or PayPal, down like 40% or something, 40, 45. Haven't really dollar cost average aggressively on those because, like I said, I do expect maybe a little bit more downside here going into 2023. But my plan is to keep raising cash right now and just really go aggressively if and when I do expect for the Federal Reserve to pivot a little bit, because I think that would be the key takeaway there from macroeconomic standpoint for when the markets can really start their sustainable recovery. Timothy says, so you're 36 years old this year? No, 10 years. You're 10 years over, my friend. Not 36, 26. So, all right, another lesson, be realistic, not delusional. Dreaming that stocks can keep going up. That's true. That is very true. I think there was this big meme that stocks, only go up. And I think that's been completely changed for 2022. It's like all we've seen is stocks go down. Milan, thank you so much. I cannot say more thank you to Caddy. He's best. Thank you. I really appreciate that. But anyway, so we have now less than 2 minutes left for the last trading day to start. Markets obviously coming down a little bit. So we do have the QQQs down about 1.1%. S&P is down about 0.7%, and the Dow also dropping a little bit more, down about 40 basis points. So we're ready, and we're going to watch a little bit on the QQQs. We'll see if we actually do get a validation at 263 for the QQQs, or if we continue on that breakdown a little bit further and we continue to slide lower on the day. and of course, we'll pay close attention to VWAPs as well to see if we actually, on the directional basis, on an intraday basis, do we have some higher highs and higher lows, or do we have some lower highs and lower lows? Because one of those two will obviously end up working, because obviously one of them is going down, the other one's going higher, right? Kevin says losses are more painful than gains are rewarding. That's true. That is very true. That's a good way to put that. And I would say that losses are more painful than opportunity costs as well, or missed gains as well. So you're absolutely right. I think that affects people more than gaining. So thank you so much, you guys. I really appreciate all the comments. I really do. Do you have a gaming PC Spotlight? Yes, I do. I do have a Razer Blade with me that I use frequently to game. I'm not a huge gamer, but I definitely do enjoy a few games every now and then, such as the Grand Theft Auto. What else do I play? The Mafia. You guys played that game? Oof, classic. Really, really good. Call of Duty, of course. And that's pretty much it. So Apple starting to kind of break outside its 128.50 level here, starting to push through. Or here we go, the market's open now. QQQ is coming down to 263 right now. We'll see if we actually do get a validation. Tesla crossing about 120.50. We just got an alert there. And we'll keep a close eye on this for now to see if we actually do get a bit of a validation at 263, or if we get a breakdown for QQQs. So intraday, like 265 would really be the target if QQQs actually end up rallying a little bit more. But of course, if we do get a breakdown, then we're looking for even a more brutal day for the market. So right now, Apple starting to rotate back up a little bit. So is Tesla. Tesla's almost up to 121. Google's struggling a little bit, down about 1.7%. We'll see if I can actually break above $88. And Microsoft is still down about 1%, but we'll see if it actually can break above $239 also. So oftentimes what you'll also notice, what I'm going to be really interested to see is that if QQQs does end up pushing higher, this is the 1 minute chart that we're looking at. So okay, the next 3 minutes, 4 minutes, we see a little bit of momentum. If it then breaks below its middle VWAP and its 21 EMA, and then there we go, it starts to breaking down. That's, I think, going to give a little bit of an edge to SQQQ's intraday. I think that's going to lead to more potential upside. There we go. We're now starting to kind of crack down here, and 263 is going to be that level to watch. If it holds up, great. If it doesn't, then I think the directional bias intraday will be very much on SQQQs. See, off it goes. Should be interesting. What do you guys think? Are we going to hold up 263 or are we going to break down? Quick. I need quick answers in the live chat. A breakout or a breakdown or a validation? What are we going to see? 263 on the Qs. Ooh, looks like we still have some buyers stepping in. Still got some longer wicks. What's holding us up? Tesla's still doing its part. Tesla's still now flat above 121. Apple's rotating back down. Google obviously struggling right now, down almost 2%. And Netflix down another 2.2%. So really battling through that level. And it looks like we're now kind of just back and forth here between the middle VWAP and the 21 EMA. So here we go, validation, breakout, breakdown, validation, breakdown. So it's kind of mixed. I think it's very much similar to the poll that we have going on. There we go. Now we're starting to see a bit of an upside here. Let's see if we can actually get a high of day above 264. It's a good validation. 263 QQQs, really nice validation. I think we're a little short on volume though, I think. So here we go. We'll see if we actually do get some gap fill, because NASDAQ certainly did gap down quite a bit right at the open. So we do have a little bit of a gap to fill to the upside, all the way up to 10,476. Tesla with a big jump, 122. Apple's pushing through. Google still needs to do a better job in kind of recovering a little bit, still down 1.7%. And Microsoft here just down about 1% right now. It's fun like watching where a casino. Don't fight the market, break down long T triple Q calls. So yeah, we'll see if it actually does get some momentum to the upside. Right now we're just kind of, it's a little bit of a choppy trading session right now. It's just, we did get a breakout, but right now we're just kind of rotating back down. Oof, Tesla looks really strong right now. Tesla does look pretty strong. I think it's the weakness from Google kind of holding us down a little bit on the NASDAQ. Microsoft is doing okay, starting to gain some momentum. Apple, Here, let me see. I need to adjust this a little bit better. There we go. I think that's much better. Oh, there we go. Now Google's showing some momentum. All right, so what do we have over here is pretty much all four names. Some of the more larger cap that's going to be really affecting the NASDAQ and the S&P 500, of course. So there's no volume. Yeah, Kevin, I was just going to say that there's really no volume right now. And when there's no volume, there's not a lot of follow through. So what we're really seeing right now is a lot of choppiness in the market. So yeah, I mean, it's a really low volume day right now. Tesla's got like 14 million shares traded. Apple looking at 3.67 million. So yeah, I feel like just not a lot of volume here. It's the last trading day, you know? What do you expect? It's like everybody's just, they'd much rather be out enjoying than be looking at the markets and be trading. Volatility is flat, just a little bit over 2.6% right now. So Tesla's the only one that's green right now among large cap, big tech. Everything else is straight up down. So what was that push from 263? It was a 0.5% spike on the QQQs, which is barely anything, nothing really. With no volume, we moon, Jason says, prepare your jetpacks. I doubt we're going to see a bit of a rally here. We're just consolidating sideways. I feel like we're just waiting for a breakdown here. Like right now, it's just kind of hovering right by that 21 EMA in the middle VWAP. I feel like it's just going to be looking to one red candle just kind of crack us down here. I think Tesla is doing its part in holding us up. I think it's mostly Apple, just like consolidating sideways, and so is Google. I think if those two names start to crack down, I think it's going to be difficult for the NASDAQ to kind of get that intraday bias on the long side. Look at the volume. Like, there's literally nobody trading right now. These volume bars are so low. Usually at the open, at least in the first 10 minutes, you get some volume to come in. It's like literally nothing. Absolutely nothing. Wow. Jason says 10:15 we rally. That's very, very specific. That's really specific. But yeah, so what do we got here on the day? Netflix is down 2.2%. There we go. We're starting to see a bit of a breakdown here on the NASDAQ. Apple with that big candle coming in. So, you know, we were talking about it just about a couple minutes ago. Apple consolidating sideways. Google consolidating sideways. There we go. We're starting to see some red candles coming in. And QQQ is really getting chopped off here. The volume spiked now when the selling pressure accelerated a little bit. Yeah, so I think the directional bias intraday could be in the favor of the SQQQ, something to look into. and to potentially trade, but it's one of those, I feel like it's a very choppy day right now. Lots of consolidation on low volume. Brandon, Caddy, do you know Top G? No, I don't. Like, who is Top G? Alex says no volume does not mean that you get to get off the live soon. Okay. No, it is the last trading day of 2022, so I'm gonna be here maybe a little bit longer than usual. But yeah, no promises though. Like, no promise that I'm gonna be here super long. So second retest on the day at 263. So we'll see if we actually do get that level validated, or if we break down below that level. I think we're starting to see a bit of a breakdown. Nope, just a little bit of validation there. Man, 263. There's definitely a lot of buyers stepping in. That's now a couple prints at 263 that we've seen. Just buyers really present at that level. What's the plan for New Year celebration? Nothing really. Yeah, nothing really. My mom's birthday is actually on January 1st, so we'll just end up celebrating that. But I usually don't even stay up till midnight, regardless of what it is, whether it's a birthday or New Year's. I don't stay up past 10 or even 9:30 in some cases. I go to bed super early, regardless of what it is. You'll definitely find me sleeping. I do get up early in the morning though, like, and then I'm like all excited, but thank you guys, I really appreciate it. Rom will be 51. No, she'll be 54, I think, 53 or 54. But you're close, Alex. That's a good guess. So yeah, just a lot of consolidation on the Nasdaq here. Nothing to watch. Google did get a bit of a spike there. Apple's still struggling. Tesla's still doing its part, up 1.3%. It's actually the only big tech name that's pushing higher. Peloton's down 3%. FUTU down 17% on the day. Zim Integrated down to $17, 4.5% here. The ones that are green are very few. Roblox, and then we got Baidu, CrowdStrike slightly higher, but everything else is straight up red. Straight up red. What are you giving her in a present? So, well, some of her friends are coming over, so I'm just sponsoring the whole party with everything. So, oh, Elvis says, "Kat, you're the best. Thanks for being here. I'm going to keep marinating my chicken wings for New Year's while I listen to you." You know what? I actually found a recipe. I tried it today. It is literally honey. It's a honey chicken wrap. I pretty much made that today. It's like you marinate the chicken with this taco seasoning and honey, and then you do it, and then you pretty much put it in an air fryer, and then on a tortilla wrap you put inside those chicken, the mozzarella cheese, spinach, and onions. Oh, really good. I had that today for dinner. So good. It was really good. Should try that. But yeah, of course, chicken wings sounds great too. We did talk about chicken recipes in the last trading day of 2022. Of course, I like to talk about other things too, not just about the markets, because I feel like we can always use a small distraction away from the market. I think markets are great. I think there's definitely a place to be talking about them all the time, but I think if you can talk about other things too, that's fun. No, I'm not gonna release a cooking book. I'm actually not that great of a cook. I don't like cooking at all. I mean, actually, let me rephrase. I like cooking, but I'm not great at it. So I like doing it, but the food that I make, people definitely won't like it. So yeah. But I do have plans of actually getting better and learning it. So better make a cooking channel. Yeah, Spotlight, I don't like spicy food. I told that earlier this year. I'm glad you remember it. That's crazy. I can't believe that you remember it. Money cooking. Yeah, you guys are so funny. Yeah, no. My favorite dish, I actually like all types of food. I really do. It really depends on what mood I'm in, but I like all types of food, man. Like really, you can give me anything, I'll have it. Really, I've tried a lot of cuisines, and I love pretty much all of them. Just depends on what mood I'm in. There's a new sushi place starting up in nearby, like where I live. Super excited about it. It's a pretty big chain, and I used to go like really far in Delhi like to get it, but now it's coming down like very very close. So super excited about it. They give you like these big boats of sushi. Oh man, I could eat like 4 of those boats. um, but yeah, Connor, thank you so much, man. I really appreciate it. Starbucks inflation adjusted tall caramel macchiato. Thank you, buddy. I really appreciate it, man. Thanks. And you really didn't have to do that. You didn't have to adjust it for inflation because, for $10, I can have like 3 coffees here in India in Starbucks. So again, thank you so much. I really appreciate it. And wish you a very happy new year. Come to the Middle East and try goat meat with rice. Yeah, I do want to. I've actually been to Middle East. I've been to Dubai. I've been to Qatar. I've had one of those mandis. I'm not sure like if you've heard of it. I'm sure you have. But the mandi is like literally rice, and then they put a lot of meat on top of it. Really good. Really good. One of my favorite things also. But right now, I do want to talk a little bit about the market. It is really choppy. It is a very, very choppy trading action with low volume. So it's just one of those days. And I was going to say that at one point, like I was going to come around it. But with day trading also, like you have to recognize the days that you can trade and the days that you just can't. There's going to be a lot of choppiness, and today is just one of those days where we're seeing a lot of choppiness where the market really isn't going anywhere. Well, now we're starting to see a bit of a breakdown, but since the open we kind of came down, validated support once, validated support twice, and it finally broke down 3rd time's a charm, where the QQQ is now starting to break down below 263. So it was a very important level of support as we validated this level once, twice. You can see that literally in front of you. We just came down, validated, and then finally broke down. So I think the next target really is going to be down to 260s. We may not get there down. We may not get down there today. Maybe we will. That's only a 90 basis point move. But yeah, we're just starting to see a bit of a breakdown here below 260s. Yeah, it's starting to drop a little bit, so we're seeing some more potential downside there. Let's take a look at Enphase. Enphase is down 2.6%, so that's good. That's really good. We're starting to see some more potential downside here on the stock, which is good to see. And on the week, Enphase is down a little bit over almost 12%, which is fantastic. Because we do have a short position on Enphase. We, as in like I do have a trade idea shared with all the members on a potential short on Enphase. And the next target really is down to 235. So I think there's more potential downside on Enphase as well. Congrats if you are trading Enphase on the short side. Wall Street, Alex, I'll definitely try that. Slow cooked lamb and the Middle Eastern restaurant at ITC will not regret it. Best food ever. Perfect. I will definitely give it a shot. I can just tell that I will like it. Just sounds like something that I would like. But definitely will try it as well. Johnny, thank you so much. I really appreciate it. Happy New Year's to you too. I'll see if I can do like a New Year live stream, like a Q&A New Year live stream. It's not going to be unrelated to the market. Midnight, maybe Eastern time. If you guys are going to be up that late, we can definitely do it. Obviously, there's going to be people from all over the world. So Disney on 70s. Let's see. So Disney stock. We have done some analysis here. I think this is a very, very strong area of support for Disney stock. We've kind of validated this level. We're almost back down to the same level as COVID lows from March 2020. So I can't remember what my intrinsic value was. I think it was in the 80s for Disney. So I think this is a very compelling level for Disney at that support. From technically speaking, fundamentally speaking, I think it starts to make a lot of sense. But we'll do like an update analysis on this stock as well once they report earnings in February. Andre says, thanks. That was already a very successful trade for me and phase puts. That's incredible. Congratulations. That's great to know. Yeah, the work is all yours, man. I'm very happy for you. So Tesla's starting to break down here. Not doing super great. And I feel like SQQ is definitely on the bull side. We did have a couple people talk a little bit about SQQs, right? They were bullish earlier. If you could just show yourself, that'd be great. I just want to congratulate you guys because I did read earlier in the comments somebody was bullish on SQQs. Yeah, Tesla's going red also a little bit. Yeah, living Alaska native, 11K riding. That's great. It's awesome. SQQQ is doing really well right now. Up 4%. All right, let's take a look at the heat map here, and we'll also take a look at the FedWatch tool and just kind of a quick rundown on the entire macro picture where we are. Next meeting is in 33 days. So in 2023, it's going to be on February 3rd, I believe. February 1st. 1st February, 67% probability for us to see a 25 basis point hike. That's what the market's pricing in. 25 is that number. 32% probability for us to see another 50. We'll again kind of revisit this regularly to see if those numbers change. I expect the Federal Reserve to raise rates by, I believe I said 50. Let me just take a quick look on that CPI number because that also has our Fed funds rate. So there we go. On February, yep. So I expect another 50 basis points and then another 25 to get us to 5.25% by March, and for us to stay there for the rest of the year, depending on inflation also starts to come down. By February, there's a high probability that we get to see inflation down to closer to 5 to 6%. That would be very nice. In best case scenario, we're looking at 4%. Worst case scenario, we're looking at 7%, exactly where we are right now, unchanged. So my expectation is that we're going to be closer to 5% by February. And then, of course, as we progress down this inflation path, depending on that month-over-month change, we could be as low as deflation, -2%, or as high as 8%. So there's a wide range of all these outcomes. But that's the probability for now, 25 from the market expected. I think that's a little bit on the low end. I think we definitely do need to see at least 50 basis points, even for February meeting. I think the Federal Reserve is going to be kind of, once again, being hawkish, reiterating that they want to fight inflation here. Azar, thanks so much. I really appreciate it, man. Glad to hear it. Happy New Year to you and your family as well. So Ian, Caddy, what's your long-term goal? So we have something very special coming out in 2023. I definitely don't want to announce it, but it's going to really help all of you, all the members and all of you guys, to pretty much do every part of the analysis and research on companies. So we're building something, and that is underway. And the timeline for that launch is going to be sometime in middle of 23. Again, I don't want to announce the specifics of it, but that's where the next step is going to be. Like, that's what we're kind of working on. Our very own sort of website. Cool. Are you still holding TQQQ? No, I got stopped out. So Discord, I mentioned my stop loss where it was on a break below QQQs, and it was only a starter position, and I didn't want to add to that position. Usually I do with a larger position. Previously I went with like over 1,000 shares, but today very, very small position, 400 shares, because Number one, no directional bias going into that trade. I pretty much ended up buying it at a support because pre-market we didn't have a lot of data to work with. I mean, usually we do see a lot of consolidation, and then during the day we can see a pre-market breakout, but going into this was just a straight consistent downtrend and then adding at a support. So very, very small position, and then you can see just a lot of choppiness. We're kind of going up, down, up, down, up, down. So then as soon as this breakout happened, got stopped out. So Brandon says NASDAQ is going to end the year green. That is the wildest prediction ever. I swear to God, if by any chance the NASDAQ ends up green, what are some of the craziest things people are willing to do if the NASDAQ actually ends up green on the year? What would you do if the NASDAQ ended up green on the year in 2022? Like literally there's news flashed all over NASDAQ with the most insane rally or the most insane recovery the world has ever seen, up 40% on Friday, December 30th, to close the year up 2%. That would be such a wild headline. We'd probably go through like so many circuit breakers. That would be crazy. And individual stocks, like I actually thought about it. Individual stocks like Tesla, Apple, like all these would be up like freaking 60%, 70%. Viking says sell everything. Kevin says run naked 3 Times Square. Man, oh, that would be so freaking funny. Tesla 400 end of day. Some of the wildest predictions there. Yeah, so QQQ rotating back up a little bit. SQQQ is now down. RSI got really oversold at that level, like closer to 262.50. And of course, so did the MACD. So we're seeing a bit of a bounce back higher here. Just the intraday high is going to be closer to this level, 264.49. No, I have not. Maybe that's something that I can maybe do a video on in the future. Some of the more recurring automated investment plans related to some ETFs and stocks. So NVIDIA short still a play. Max, I mentioned this in our Discord, but I think it's time to take some of the profits off the table. How is it doing today? So down 1.3%, down 144. So we talked about it a little bit in our Discord, but it's already sold off 20% in the last 2 weeks. So I think it's normal for us to take some profits on the table, and it's normal to see a bit of a technical bounce here before it continues lower. I do think that it's got more potential downside left because valuation-wise, fundamentally, it just doesn't make sense where it's trading right now. But that shouldn't stop us from taking at least something off the table there. So let's see. So will shorts cover for the long weekend? That is the main question there. The volume's really low for any activity right now. That's why we're just seeing a lot of back and forth from the market, because the volume's really not really there. No volume. Look at how choppy Google is. Just back and forth, back and forth. Alex, thank you so much. I really appreciate that, man. It's been a pleasure to watch and learn from your channel. It was super tough year, but you really gave me a hope and positive perspectives. I just would like to say thank you, Caddy. Alex, thank you, man. That really means a lot, and I'm glad I was able to help. And we're going to keep doing this in 2023. And Got lots of big ideas and projects to share, so super excited about that. And yeah, thank you so much. So Ian, when investing in a company, do you recommend buying in short bits or going all in? So I never recommend going all in on anything, right? Whether it is like an individual company, crypto, or whatever it is, always have some buying power, some cash available on the sidelines. You never really want to be all in, all in. But definitely, it depends on the company, depends on your conviction level in that company, and depending on the price where it's trading at, how close it is to that intrinsic value that you've calculated, and what's that valuation. So if it's like really, really cheap, undervalued according to your analysis, and company's got insane amount of moat, growth projections, and the fundamentals make a lot of sense, then yes, it makes sense why you want a dollar cost average a lot heavier, and buy in a lot more aggressiveness and a lot more shares. But if you're just getting started with that position, if you are learning about the company as you go, if you're waiting for some quarterly earnings and you can take starter positions, I like to call them getting a little skin in the game, small positions. You can add more as your confidence builds up in those companies. And it's the same thing. If the company doesn't actually execute the way you expected them to, you can always take that small position out, and move on, right? So it really depends on a lot of different situations, but depends on the stock, depends on your conviction, the analysis. Sam, why do you believe the market is choppy right now after a strong dip down? Why are we ending the year choppy across multiple sectors? I think it's mostly because of the volume, really. There's no news, right? There's a lack of news there. No catalyst. I mean, this week was supposed to be just this it's supposed to be and is a very uneventful week. There's literally no earnings, like none. No companies have reported earnings this week. I think there's only one that I saw that was on the list, which is quite meaningless. It wasn't like a big company anyway. And then from a macroeconomic standpoint, of course, we had the jobless claims. We had some home price index, the Schiller index, all those things, but nothing that's really been moving the market. So I think the lack of catalyst and the lack of volume today and mostly this week has really resulted in a very flat week. I think the S&P is, for the week, only down 0.7%, right? So not a whole lot. NASDAQ is down. NASDAQ for this week is actually up. No, it's down 1.3. I was going to say, like, there's no way it's up. Down 1.3%. So, yeah, we're not really seeing a lot of activity, a lot of momentum. And I think that's very normal for the last trading day. And you don't have a lot of investors trading right now anyway. So Oleg, yes, InMode would still be on my radar at low 20s. I would be interested in that stock very much. So that's something that I will be paying attention to in 2023. So best sectors to short in the first half of 2023. That's a very loaded question, but I think there is potential for energy stocks, as I mentioned. If oil prices stay down, if they keep going down, I think XLE energy, I think, has some potential downside there because we're seeing a big dispersion between oil prices and energy stocks. Energy stocks pretty much followed oil prices on the way up, but they're not following oil prices on the way down. And that just goes to show that markets' expectations of higher earnings can be a bit flawed, right? So higher oil prices definitely helped energy companies produce higher earnings and free cash flow. But lower oil prices are also going to affect energy companies produce lower earnings and cash flows. And that, I think, is not being priced in yet. So if and when that gets priced in, if and when that happens, I think XLE has the potential to maybe come down to low 70s or even in the 60s moving forward. So like Caddy plan for everything, return to COVID crash levels, the downturn, agree. Well, a lot of companies have already approached that level down to the COVID lows, right? So I think the NASDAQ has obviously not. The indices have not because they're still way higher than where we are. But at 6,700, I mean, you're just getting down to some just, I don't even have the words to express and explain how cheap the market would be at 6,700 Nasdaq and S&P at 2,500 or something, 2,200. Like, I can't even begin to explain the valuations that we'll see at those levels. Like, cut the S&P now in another 50%, right? So we've talked about the S&P P multiple. Right now we're trading at, so right now the market's at 3814, call it 3,800. We're at 16 times earnings on a forward basis currently, right? In fact, we might be at 17 and a half if you kind of shave off the EPS down to 216. Now you take that number and you divide it by 2, actually a little bit over 2, just do it by 2. Yeah, we'd be trading at under 8.8 times earnings if the market drops all the way down to that COVID low. That is going to be crazy. Like, whoever is going to be selling it at an 8 times multiple S&P 500 is just, it would be, yeah, I just have no words. Like, the market would be insanely cheap at that price. What's your price prediction for Tesla at the end of 2023? Ian is asking. It's a good question. I think so. What we have seen, and when it comes to price action and how stocks end up performing, is that you have to really understand what is institutional going to put their money into, right? Where is big money going, right? That's the bottom line. In short term, if you want to be more tactical, that's all your main focus. You're just trying to answer one question: where is the big money going? That's every year at the start of the year you ask yourself this question: where is the big money going? Which asset, which sector, which stock, where's the big money going? That's how you can be more tactical, and that's more of a short term. If you're long term and if you focus on company fundamentals, then none of that matters, right? It doesn't matter where big money's going, because if you find a good quality company, eventually it will come into that company because the company fundamentals are so good. And it will realize and it reflects in the stock price maybe 3 years, 5 years, 7 years down the road. But if you're being more tactical, if you're just looking at it quarter by quarter or year by year, the only question you're trying to answer is where will big money go? Now, this year, it went into energy. It's very clear, very apparent. You can see it in the FinWiz chart, right? So it's pretty clear. Some of the sectors that are green, it's energy, it's healthcare, it's utilities. So year to date, this is where money went, right? Why? Higher oil prices resulted in higher earnings, resulted in higher stock prices. So these are the companies that grew earnings by 150%, right? So when you see those headlines, ExxonMobil grows earnings by 200%, beats earnings, beats revenue, of course investors want to be in those sectors. They don't want to be headlines in these. Google's earnings declined by 20%, misses earnings and stuff like that. So it's very, very clear, right, what worked and what didn't in 2022. Now, what's going to be difficult, I think, in next year is going to be that these companies are going to be dealing with the tougher comps, right? They already grew by 150%. They certainly cannot beat that up, considering oil prices are down 41%. These companies have very soft comps, right? They don't have that elevated, that high comps to work with. So they've got a higher probability for showing growth, right? Showing growth on a year-over-year basis, even beating expectations going into next year. So comps are going to be much easier to work with for these companies versus energy. So, obviously it depends very much on the macro thesis, what happens with inflation and interest rates. But if Tesla can continue to produce, 1.7, 1.8 million vehicles next year, even close to 2 million would be great. If they can increase and ramp up production capacity, announce even one more gigafactory, maybe we get some good news on Cybertrucks and the semi stuff and those things, and earnings kind of hold up next year, $4.50, closer to $5, or might be a little bit lower, but depending on where they are, Tesla's got potential to close the next year, close 2023 green, along with some of the other growth stocks as well. So So that's my quick take there for 2023 for Tesla. Here we go. We're back down to 263. I mean, the QQQ is just kind of not really doing anything. Really, really boring day. But anyway, thank you so much for joining, everybody. This is gonna be it. This is our last live stream of 2022. All I ask from you guys is to hit that like button. We're at 130 right now. So I would really appreciate it if you can drop a like and of course subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below with that 16% discount that does expire tomorrow, December 31st. The 16% annual discount will go away. So if you want to join with very limited spots available, link's going to be down below. And also don't forget the fundamental and technical analysis courses. The bundle is currently 60% off, coupon code New Year. And that also expires tomorrow night. After that, the biggest sale of the year will be over, unfortunately. So thank you so much. I really appreciate it. As always, happy investing. Hope you all have a fantastic rest of your day. Happy New Year. I'll see if I can be live during that time to pretty much do the countdown with you guys. If you are interested, so let me know. I'll be live. And yeah, I'll see you guys now in 2023. Our next live stream will be next year. So thank you so much. Happy investing. I'll see you all on Tuesday. Take care.